The market kind of befuddled me. I wouldn't have thought that the market would have been so strongly higher on a week when inflation turned up as hot as it's been since 1982. What should we expect this week, come what may, from the Fed?
I think, Tyler, that the reason the market was so strong is because people are starting to embrace the idea that we're at peak inflation. Right. So the 6.8% CPI number was no worse than expected, even though it really is quite high. The PPI tomorrow is also, the whisper number is for 10% year over year, annualized. That's a hot number. I know. That's the whisper number. So let's see. Maybe it comes in less, and then that feeds into the story of maybe we are at the peak, right? Or that we have at least embedded all of this into our models and into our numbers. I think retail sales is awfully important, too. I think we pulled through a couple of months worth of retail sales a couple of months ago, but we are still 10 percentage points above in terms of retail sales above the pandemic. So consumer remains strong, but how much did we pull in because we were afraid we weren't going to be able to get any goods because of the supply chain? And then, of course, as you mentioned, the FOMC, everybody expects a much more hawkish Fed. Let's see what exactly they say in terms of the number on the taper.
A 10% PPI makes me want to whisper, Stephanie. I think we should all just whisper about it, not even talk about it. Let's go to a couple of stocks that you are watching this week because of earnings. We don't think of this particularly as earnings season, but there are some stragglers out there, beginning with Lennar.
Yeah, because housing has been really strong. We know that. And last week, Toll Brothers, they on their conference call said stronger for longer in terms of demand, because we have underproduced for the last decade. So I want to hear if Lennar has the same kind of tone and backing. Of course, orders and closings will be important, but also pricing power. 40% of their revenues come from the West Coast. And so those are areas, those states are seeing faster growth, and they have pricing power. And then, of course, they are spinning off their asset management business, but we don't know a lot of details. But you know me, I like spins. I like the parent company and the SpinCo company. So I'm really eager to hear what they have to say.
Accenture is also on your list of ones to watch.
Yes, I mean, this is just a compounder, Tyler. Enterprise spend recovery story. We saw it from Broadcom. We saw it from Cisco. We saw it from HPE. And I think we're going to see it at Accenture. Consulting is going to be strong because companies are digitalizing their businesses and they're replacing legacy assets. This company has been able to deliver double-digit earnings and revenues, and I expect that guidance to be the same for fiscal 22. And, of course, we're seeing operating margin expansion. They just deliver. That's the reason why the stock trades at 37 times. Any chance you get to on this stock to buy on a pullback, you ought to for the long term.
And Darden Restaurants is number 3. I mean, here in the New York area and right here at CNBC, we're being asked to put back on masks in public places, no matter your vaccine status. Darden, you think, can thrive even amidst uncertainty and insecurity about COVID?
I can, because I think the casual dining market is so large. It's a $195 billion total addressable market. And at the same time, you have 10% capacity getting reduced. And so Darden has size and scale, and I think that they can gain market share even in challenging times. They said last quarter that sales were back above pandemic levels, so I expect that to continue. And they're focused on profits over sales growth, which I think is a smart thing to do. It trades at 19 times. It's not very expensive. I mean, McDonald's trades at like 28 times. I own that one. But this one is interesting because you also get a 3% dividend yield.
All right, Stephanie, great. Enjoy the tree. Gorgeous. Appreciate it. Stephanie Ling.
Thank you. Thank you.
Shepard Smith here. Thanks for watching CNBC on YouTube.